Yo, mic check 1 2 3. What is up, YouTube? It's your boy Forex Poppy back with another video. Just took a trade. I did record it, but I didn't speak into the mic, so I messed up the audio. So now I'm re-recording it. So as you can see, that's the day I'm having today. Did end up getting in a trade. Didn't end up getting to our final price target, but we paid the trader. We took profits along the way. That's all we can really do. So let's build a narrative for this trade. We're going to walk this dog really slowly.
Don't even fucking talk to me.
So starting on the higher time frame on NQ at the 30 minute, we have price coming back down after sweeping last week's weekly objective. Then after we sweep this objective, I'll even draw it out so that we can see it. After we sweep this objective, we displace back up, taking this high internal liquidity. Come back down, create a low, create liquidity, accumulation, manipulation, distribution. Then notice the displacement in this move through all these legs, creating this new price leg. So now price has generated liquidity, hunted liquidity, and then now we just need to, after we just hunted this liquidity, we need to rebalance to equilibrium and inefficiencies, which is what we did here. So if we go to the 1 hour time frame on NQ, we have price returning back to equilibrium, back to this fair value gap, holding it, and then giving us this big push back up. And now let's go down to the even smaller time frame. Now on the 30-minute time frame, you can see that we ended up putting a low inside this fair value gap, which I'll mark out. We sweep the low, the wick did all the damage, and then we have the displacement move back up. Now we come back again to not equilibrium of this price leg here, but the equilibrium candle, which is the candle that touches equilibrium. Or I believe ES ended up coming back to touch the fair value gap. And then we get another push back up, out, and then displacement. Now ES doesn't have all these highs because we're at all-time highs here. But NQ, if we go to the 4 hour, we still have room to run before we get back to the all-time highs as well. So then now back on the 30-minute, we have created this fair value gap, displaced through the highs, waiting to see this high get taken, and this high that it recently just put in as buy side. So we draw our fib. Price retrace back to equilibrium perfectly. We are inside the fair value gap. During London session, price put in a low inside of the fair value gaps. Now we have our internal liquidity. So this is just our model, just on the higher time frame. So then we end up coming back here, because notice price comes up, comes down, puts in liquidity, and then comes back up to sweep these highs, which that's all price is going to do. And then we don't displace this time. So last time we swept highs, we came back to equilibrium. We didn't displace through, came back to equilibrium. We don't displace here, we come back to equilibrium. No matter what time frame, how far you're looking back, price is going to continue to do the same thing. We just have to recognize it. So when we come back here, only thing we want to see is price not displace through these lows. We just want price to sweep them, which is what we do. Wicks do all the damage, and our bodies stay at equilibrium. Down to the smaller time frame. At the time I was looking at this trade, this was the SMT, but it ended up getting ES ended up taking this low. Or sorry. Yeah, ES didn't take this low yet, and then NQ already did, but ES ended up taking this low. But what I'm noticing is, so we have our internal liquidity. We're at equilibrium. We are inside of this fair value gap. And then what do we do here again? This is all pre-market, accumulation, manipulation, and then I'll even draw it out again. So we have the accumulation, the manipulation, and then the distribution inside this fair value gap as well, which is a bullish model. So then once I see that we have price, and this is the gem here, when price manipulates and leaves a fair value gap, to get ran through back to the other side, we don't need the market structure shift. Especially with the SMT, we do not need the market structure shift. We can take the inverse, which is what I ended up doing here. So I noticed that let me delete this. I noticed that we have this fair value gap. We end up closing above it. Next candle holds above it. Wait to see the type of reaction that we get, and then I enter longs here, even though we haven't taken the market structure shift, and then we get a nice push. I move to break even, and then we end up getting stopped out at break even. So that was the first trade that I took today. Second trade that I took today was this exact same model, just a different entry method. So we have this breaker block here, and to recognize the breaker block, it is the largest. If we need a breaker block to go to the upside, it is the largest down close candle that takes this low. It takes a low and a high. So even if the high is its own candle, so it took this low here, and then ends up taking the high, making this the breaker block, which is where I enter on the next entry. So if we go back to the 1 minute, so I get taken out of break even here. But I'm like, I still believe, I have a lot of conviction that the draw is higher. So I enter back in here. All we do is put in a low, manipulate the low. Once I see this nice push out, as soon as the candle closed, I add in my next position. Now I'm in 2 contracts. And then once we retrace back to this fair value gap here, because we are in a buy program to my knowledge, we should hold. We end up chopping around a little bit, but so that's when I got 3 contracts deep into this position. And then after that, I knew that we had news coming out. So if I refresh, we had news coming out at 10 o'clock today. So I held through the news, knowing that news is just a driver to push price to the drawn liquidity. So then I just wait, I don't get scared, and then we have this push here. Oh, didn't I delete this candle? So the news comes out right here. So we already had a nice push up, so I was already very confident that we'd at least take out these highs. So then news gives us this nice big candle here. I take out 1 contract here, I leave 2 running to the external draw, which would be the London highs that I had. But we didn't end up taking it. But I did end up paying myself, at least off the 1 contract. So we were up 552 on the day. Notice even through the drawdown. So my first entry was here on the breaker. Let me take off the magnet. First entry was here on the breaker. Stop below it. End up coming here. So I'm thinking, like, if this happens.
Because if this happens, if this happens, Max, I don't know what I'm going to do with myself.
I'm like, damn. Because I was in a losing streak. Like, believe I lost 3 trades in a row. I don't trade every day, but I still, like, even taking the best setups, I lost 3 trades in a row. So then now, after price has done this, looks like we just took out this low here. And then let me go to the 1 minute here, see what price is doing. Oh, wow, okay. So now we have ES not doing any of that, just making higher lows and higher highs. Looks like lower resistance liquidity right here. But if we displace through, but I do know we have a 15-minute fair value gap right here. Yep. So I didn't have conviction for shorts as of yet, but if we displace through these lows, then I will have that conviction. But this is another reason why we didn't end up getting to buy side here, is because we had this 15-minute fair value gap to fight, and we probably got a short model inside of it. So I'll draw it out, go down to the 1 minute, and then I will delete all this, or I need to still journal that, so I'm gonna just okay. So we have price. When does price get here? 9:30. Okay. So we have price put in the high here. So this is now internal buy side. And then we have the buy side of the curve. I hate when it does that. So the buy side of the curve, which is what we were doing the whole time we were buying the buy side of the curve, which is why I need to take price off here, because this could be where we soup and then go lower. So we have the buy side of the curve on a 30-second time frame. This would be a market structure shift here, because we have this high, the low, and then we have a new high. 30-second time frame, this would be a lot clearer for a market structure shift. But this is the market structure shift here with displacement. But I try to, like this year, I'm trying to take like my more prominent highs and lows. I'm not as experienced enough to be taking trades on the 30-second time frame. I don't have a lot of practice with it either. So I would say that we'd have to wait for the market structure shift here to come back to sell side. And then did we have at least have SMT or something? Okay, yep. So then we could see here price. Let's see, yep. Price is making lower lows right here. And then price is making higher highs here. So now it's time to get disrespectful.
You better be careful about what the words that's about to come out of your mouth. Don't be disrespectful.
Notice, and then when I say with the SMT, you don't need the market structure shift. So then now that's when I would get comfortable taking price after the first displacement candle or an inverse, wherever you see fit. But the first displacement candle normally is a good when you have to backtest it. It does work very well, but I would only take it to here. Like if I got in 2 contracts, I would take one off here. Put stop at the high, so it'd be about 15, and then first take profit here, and then second take profit would be sell side here, and then that would be the sell side of the curve, which is the entire model. So there's so many different ways to take this model, and then we got another one here. So some good setups today. Didn't trade yesterday because it's a no red folder Monday. So, but yeah, so now price would just have to displace through this low to make me feel like we'd want to go lower back to sell side here, or at least to here. We have a little bit of generated buy side or sell side. So just gotta wait we need some more structure now. Now we've taken subjective. Need to see more structure to see what price wants to do. We are in the middle of creating this 15-minute fair value gap. So if we do displace and price retraces back here, I would look for that same model on the that just played out here. I would look for it inside of this fair value gap if it got placed. So this is the fair value gap I would look, and then if we displace here, don't take this low and come back, I would look to see the market maker sell model back down to these lows here. So if there's anything else, I will come back, but if not, I hope I explained this pretty well. I'm trying to get better at explaining like I'm talking to people instead of trying to make it my other videos sound so monotone, so trying to get better at talking to YouTube, and then we go from there. So I will be back if there's anything else to show, but just up 5, almost 600 on the day as of right now.